What's going on, everybody? What's going on? What's going on? How you guys doing? Give me a 1 in the chat if you can hear me okay. Give me a 1 if you can hear me. There we go. Alright, I just want to make sure. Okay, so today we had a nice move, especially in the morning was the cleanest, right? Afternoon, kind of boo-boo. I didn't even look at the market after this move right here. Ended up going to the gym. But today I wanted to go over my trade in the morning. Hopped in like right here and wrote it down to here, right? And so you don't need the whole move to be profitable. Obviously, you know, hindsight 2020 could have held runners, right? But we're looking to get our piece of the pie and exit. So this stream's going to be focused on what I was looking at in the morning. We're going to review the trade, and then we're going to answer questions. So awesome, AMD. Yeah. So save your questions towards the end. I'll go through the trade recap, and then we will do the questions after. So I always start my morning off on the daily, okay? And obviously we look at the red folder news. We had at 10 o'clock, so I had that marked out. But the only real like points of interest for me were this candle right here and the buy side above this high, right? If we wanted to keep reaching higher, this was today's candle. This is the new day right here. But I had the consequent encroachment of this wick right here marked out, which is this black line here. And I'll go ahead and make that red so it's not confusing. So I had this marked out. I also had this order block right here, the opening price marked out. So that'll be blue, and we'll just name that negative order block. Okay, so we didn't even come close to that, but we did hit the negative. Sorry, did hit the CE of this wick here. So I always go in from a daily, and obviously I had this fair value gap. I was looking at that as well. But price opened up here, right? So we weren't even close to that. So I had previous day's low and high marked as well. I have a separate layout for that. And so today, I'm going to clear all this off and show you what I was looking at. So I always start the day looking at the daily chart and also this chart right here, as well as the weekly opening gaps, right? But I don't like having these gaps on my chart because it makes everything look super messy. So I kind of have different layouts for them, and I can easily toggle back and forth between the two. So daily profile, previous day high and low, super easy to mark out. All you got to do, I do this at the beginning and end of every day. Super easy. There we go, right? So you can see this kind of looks almost like a search and destroy, right? Took the high and the low the previous day. So maybe we will get some nice range into the rest of the week, right? We could continue lower, or we could reverse after taking this and go higher and take out this high now. It's going to want to rebalance probably some of this as well. So that's for another video. We can talk about it at the end. Anyways, what led me to believe that this might be, and I tweeted at, let me see if I can find the tweet. For those of you who don't know or maybe don't follow me throughout the day, I'll copy this link here. So I tweeted about right here at 8:50 in the morning before market open. I'm watching this potential power 3 setup on ES, and obviously the trends have been bullish, the order flow has been bullish. When you go over to a hourly chart, daily chart, right, we're reaching. Drop down to a 4-hour. We've just been kind of grinding higher, right? So why try call a top? Well, the reason, I don't usually call tops, but the reasoning was this right here. So we have Monday's high and low. And so to me, this was super clean, right? And so in London, we had taken out the high right here. And so this looked like and actually if you want, I can just throw the boxes on. So we have Asia accumulation, and this would be your manipulation right here. So this is the protraction, right? The Judas swing. And so this would be your Judas swing right here. And so usually London will set the high or the low of the day if it's going to be a nice range day with the with AMD, or power of 3. AMD just stands for accumulation, manipulation, distribution. So the high day was made, right? But the true day is a different time period. So the true day is from 9:30 to 4 o'clock. And then obviously futures trade almost 24/7. So we do get the London session and the Asian session. So you kind of have this, these clean highs being taken, right? And just so you know, if you're new, this is Asia session, this is London, this is New York AM session. So it's a classic accumulation, manipulation, distribution, power of 3, okay? Beautiful. But when I opened the charts, they looked like this, right? So you don't get the benefit of hindsight. So this is what I see, right? This is what I see. And so these are super clean down here. We've already taken out all the orders that have been, resting above these highs. This high, this series of highs right here, super clean. So price comes up. People think this is resistance, so they're going to want to long the breakout. And the people who are trying to short, right, they see this as resistance, and it's going to go lower. They're now stopped out. So we've grabbed their orders, and now we're going to drag the people who were long right here, buying the breakout. They're going to be dragged over the coals, and they're going to be underwater by the time market opens. So this is kind of what I saw, and you can call this right here, this whole move, you can basically call this whole entire section accumulation, right? Because we're kind of just chopping around. But if you want to make it super clean, and let's zoom in here, I kind of just marked this out, this whole Asian session, as accumulation. So there's your accumulation. And I have the chat closed right now. So if you're asking questions, I can't see it. I'm just going to get through this real quick, and we can do questions at the end. So that's accumulation, right? And so we had our manipulation right here, right when we take out these highs. And then I'm looking for something like this. At least, right, in the morning, I want to take out these equal lows down here, right? The accumulation. So it distribute, right? So it's all, what's the narrative? Smart money is selling in to all the people who are buying right here. They're also selling into all the buy stops resting above here, because when you sell short, you have to buy back your position to get out. So their buy stops resting above here. So that's buy side liquidity above here. Buy side liquidity above here. People are also buying the breakout, so they're buying. Smart money selling up here in the manipulation leg up here. And when you want to get out of your short, right, you have to buy as well to buy back your position. So there's a lot of liquidity up here they can sell into. Well, they also need a lot of liquidity to get out, right? So to buy back their position. So what better way to pair their orders than all the people who thought this was support, right? They're going to jam their stop loss, right? Because when you're long and you want to get out, you have to sell. You have to sell your position because you bought in. So now you got to sell. So, and this might sound like super basic for a lot of you, but this, I'm catering to everybody here and just kind of going through the narrative of the morning that I saw. So when you're short and you want to get out, you have to buy back your position, right? So you need a lot of sellers to buy from. So they're going to pair their shorts up here because they're now short. They've sold into the buy side up here, into the buy stops and all the willing buyers. And they're now going to get out and sell in a discount to all the sell stops below here. So sell side liquidity, okay? So all the people who jam their stop up here after they saw this move, they're going to get stopped out if we come down here. And so that's how you frame narrative. That's how you frame, basically, what if you're smart money, if I were buying and selling people's stops, how would I manipulate the market and where would I take it? And this is exactly what I was thinking in the morning, right? We have the manipulation above here after taking out previous day's high, and we have a nice equal lows here. So when I tweeted, this is what I tweeted on that tweet. I'll copy the image here. Oh, it's too large. I don't know if I can paste it. Here we go. So I tweeted this, and you probably can't see the timestamp up here, but this is the same image I tweeted on this tweet right here, okay, at 8:50. So you can go on my Twitter, look at it, and this is what I saw, and I literally drew the exact same thing, and this is how I came to this conclusion with this drawing. So I was eyeing the sell side, right, with the little eyeball there. And Look what happens next, right? We get a nice, you know, I won't say fake move, right? This is kind of, they're holding the market here, not taking out the sell side yet, because they want to trick people into thinking this is still support. So they're going to make it look like it's bouncing here, right? Bring it back up into a premium. And how do we know it's a premium? Let's draw a fib, right? You can see right here, it hits optimal trade entry, 6-2 retracement, hits this order block right here. Because when you're bearish, you want to see up close candles reject price. So we could just highlight this whole candle if you wanted as a negative order block, right? And it hits almost the mean. If you want to measure it, you could. Hits basically the 50% or mean threshold of that order block, and that's as high as it goes, right? As long as, and as well as the OTE right here, optimal trade entry. And then you see the reaction. That's the 10 o'clock news. They bring it up one more time for smart money to sell short again. People were buying this thinking it's bouncing. Boom, they knife it down through sell side, and they're unloading their shorts. And so that was what the whole move that I was looking for in the morning, and that was going to be my one trade for the day, and it was. That's how I came to the conclusion. And you can see rest of the day, you know, we had a nice sell-off, taking out the previous day's low over here from Monday. All these equal lows over here. You could draw it out if you wanted. All these equal lows. You also have a nice fair value gap right over here. It was supporting price. And you can see price basically reclaims that, kind of retraces a bit. And that ends up being the low of the day right there. So that's basically it. And then we kind of just have been chopping around now. So that's where we are now. But I'm gonna go in on a smaller time frame, right? And that's how I framed the morning bias right there. I wanted to see how we 9:30 opened, and when I narrowed it on a smaller time frame, I started seeing, you know, we had buy side of the curve right here, and then sell side of the curve for a market maker sell model. So I'm gonna go through, and we're gonna switch to the charts over here. Let me just reset all this. Actually, I'll just keep this so it's clean. All right, so let's switch back over here. So on the daily chart, remember we start on the daily chart, I have this consequent encroachment marked out, opening price of this order block, and some buy side if you want to just kind of barrel through these. I was looking for this to be taken out if we just kept going higher, higher, higher. So let's switch down to a 4-hour. Not really much there. We have this order block or this up close candle here that if you wanted to measure it, I guess you could, right? We have, you know, it's about the same as this daily order block C of the wick, right? Which is the red line. So I kind of just didn't really mark it. It's basically the same thing. Let me go into a 1 hour, right? You know, we have this big fair value gap we end up filling pretty much all the way up. And that's kind of where price stops. So you can see we hit that CE pretty nicely, right? Kind of accumulating above it, and then we have the sell-offs. And so this is what how my charts are laid out. I'm gonna go ahead and delete the daily consequent encroachment of the wick, and let's just clear everything off real quick. I know I kind of spoiled it because I have the drawings on there, but let's clear everything off. And this is what I look at pretty much every day, right? I've been trying to stay off the 1 minute. And I've been trying to stay on, you know, higher time frames, especially because this whole move up has been pretty, you know, it could be choppy, and that's kind of the reasoning of why I've been staying on the higher time frames. And it's a lot less stressful than, you know, having to be on the 1 minute. Like, just it's just a lot cleaner, right? And you have all these, you know, stop outs, and then just chop, 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 then a move. Chop, 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 then a move, right? I've been on the higher time frames because of that. So I am going to show you basically what my morning looks like when I sit down. Charts were about, let's say, I usually sit down like 8:30, so, or 8:30. So let's just say 8:30 opening. 8:30 open happens right here. Okay, so there's 8:30. So what I do is I mark up midnight open. So that's right here. I'm a power 3 trader. I'm also a I like to trade power 3, right? Which way is the daily candle going to expand? In hindsight, obviously we went up, Judas swing, and then came all the way back down and closed lower. So that's a classic open high, lower close day. And that looks like this, right? In simple terms. You have your open, highs made, you have your low, and then your close. So we call that open high, lower close. So open price, the highs made, low close. And that's what we have right here. And so that is how I like to use Power 3 on the daily candle. And so I always want to, you know, that's how I define daily bias. And my bearings and how I get my bearings is by using 8:30 open and midnight open. So let's go ahead and make these only visible on these lower time frames. Keep the 1 hour nice and clean. And here we go. Okay. So remember, this chart is on replay mode, so you can't see the move right here. But this is how I look at it. So when I sit down, I notice, okay, we've had a nice shift in market structure here off this candle. It's not, you know, this isn't a major shift, right? But it is a shift with displacement because we have these fair value gaps right here, right? So this has been keeping price at bay, you know, pretty much below the 50%. We did kind of close a bit above here, and then we are back underneath it here. So I was watching this, also watching this breaker right here. So if you're not familiar, a breaker is, don't worry, I'll show the indicator at the end. Let me just get through this trade recap, and I will show you the indicator and all the settings and everything up here. So this is a breaker as well. We have a high, a low, higher high, right? And then price will run through that as I was watching right here. So right when price breaks this is now validated. And so we can mark that. This whole, all 3 candles are the breaker. And let's mark that, negative breaker. This is a fair value gap. I can mark that in case you are not familiar with it. This is your market structure shift, even though it's super small right now. There we go. Right. So let's just keep in mind that's the market structure shift I saw after we've, you know, formed this breaker almost. So once price started to come down here and validated this breaker, this is also, you know, if you weren't happy with this market structure shift, this right here for me would have been enough, right? Clear buy side of the curve. Actually, wrong tool. Clear buy side of the curve, right? And now it looks like we are about to embark on the sell side. Okay. And so when people are asking, you know, wouldn't this be a good place? You know, it's just a pullback, right? It's just a pullback. Well, a pullback is this, okay? A pullback is not something that runs up. It almost looks like a U, is forming a U, right? It doesn't, a pullback is not something that runs up and then starts chopping around up top, right? This looks like it's been from expansion to consolidation. And in hindsight, it was a reversal, okay? But to me at 8:30, right, when I open the charts up and price is just like on this candle right here at 8:30 open, this just looks like it's consolidating, right? So it could do one of two things. It will, first it's got to move out of consolidation into expansion, all right? But on a higher time frame, this was a reversal, see, on a 1 hour. So this just looked like, it didn't look like a pullback to me, because if it wanted to pull back, right, it would have done so. But instead, price was just held up here and started chopping, and I started seeing a shift, displacement down, and I started seeing these PD arrays now rejecting price. And so I wanted to see, I almost took an early entry right here, okay? When price comes up and tagged this breaker, this actually is a, let's delete all this stuff. So you can see, let's make this available only on the 5 minute. Okay, there we go. If you look really closely, but then just, there we go. Don't want to move that. If you look really closely, right, this candle right here is this, this move from here to up is this move right here. So what do you have right here? You actually have a small little 15-minute fair value gap, okay? And that's what this is outlining right here. It's also in line with this breaker, okay? So this is almost like a unicorn setup, and the unicorn being a breaker with a fair value gap inside. And so you can see the next candle, price hits it, right? Hits into that 15-minute fair value gap that was formed, right? Because it hit 9 o'clock. So that's a new 50-minute candle forming. Price comes up, hits this fair value gap, and then rejects, which is also part of the breaker. And so you could have taken an entry there. And I almost did, but I wanted to see how we reacted because we had this volume imbalance supporting price. And so I wanted to see price get under that. And once it got under that, it inverted. Basically, we call that an inversion. Would have inverted. And I would sell short into that. Okay. So right here, once price closed below it and also broke this low, validating this as a bearish order block, because you want to see up close candles reject price now. Now that the bias has been framed bearish. And so this looks like a clear market maker sell model to me. And where would I target, right? So that's how I structured this trade idea. And on this candle right here, this next candle, when price came up, hit the volume imbalance in this order block right here. And I'll go ahead and mark that out if you want. Sorry, it's kind of starting to overlap now, but you get the idea. Those two candles are a bearish order block. And so I got in when this price opened up down here, came up, hit the order block. I entered short right here. And I can pull up let's pull the trade executions. I don't know if I can show executions in replay mode, can I? Let's just exit replay mode. All right, so, and also I'm gonna explain these. I'll explain what those are. TradingView was lagging when 10 a.m. news came out, and I kind of got screwed on, it wouldn't execute my orders. Thank God I wasn't trading with live funds then. So right here, right, market sold 5 contracts as price came up and hit that, and obviously slippage, a tick, one tick lower, I got in. So let's see here. Let's see, okay. So entered short, right, when we closed below 5 contracts, and my partial targets, where are we going to take partials, right? So now that I am on the 5-minute and I'm short, I'm going to manage the trade on the 5-minute. Doesn't mean I'm not going to look at the higher time frames, right? But it just means that I'm going to manage and trail my stop and do all the necessary things on my entry time frame. So entered short right here. Let's mark that out. In a perfect world, I would have gotten filled right on the volume imbalance, but I got filled a tick lower. So let's just be fair and mark it lower. And then my stop is above this high right here, 1 tick, because I wanted to see these candles support price, or not support, but reject price. So about a three handles and 25 or 1 tick higher stop loss. And then I targeted, my first partial was below this low right here, because there's sell side below there. So sell side liquidity, and it's also in a discount. If you want to do premium discount, right below the 50. Obviously, yes, you have low hanging fruit right here. Okay. But in a sell model, I was looking for a nice deeper run. So I could have taken partials there, but that would have not have given me a nice trade, because if you look right here, if I want to take partials at this volume imbalance, fair value gap, it's not even a 1 hour trade, right? So I only take trades that are 2 hour or higher. So 1 tick below the sell side is a 2.3 hour trade. And you can see right here, I scaled 2 off, or about 40% off at 41.54 and 25 cents. So that would be right below this level right here, 1 tick below this level. So 2 come off there. And then when I scale 2 off, my stop now goes break even. Okay. First partial break even. And then it's risk free. So now my next scale was midnight open. Okay. And so you can see right there, second scale, bought 2, midnight open. And the last contract I was holding for this sell side right here, right? Or the original consolidation of this sell model, right? Which is also, sorry, I don't have a list, but also Asia lows, because this is Asia session right here. So that was what I was waiting for, but you got to remember, we have high impact news at 10 a.m. So we had a nice, looked like a bounce to retail right here. And then at 10 o'clock on this candle, I was stopped out back up. where is it? I think my stop was break even like right here. Let me a tick lower. So right here, right? And as you can see, I got filled twice right here, right? Because it wouldn't stop me. It didn't stop me out. When I went down to, if you go down to my account history, this right here is what stopped me out, and it wouldn't place, right? Price came up even higher and I was still in the trade. And I ended up just coming over here and hitting buy market, just trying to get out, which actually placed another order to buy in. So basically I bought to get out, and then I bought in again once TradingView stopped lagging. And then when I realized I was in a trade, when I realized it had double placed the order, I just instantly sold it, right, for a loss, because I was in a losing trade that, technical difficulties got me into. And obviously it's paper, but I ended up selling, which also wouldn't go through. So I hit it again, and you can see it sold me short again, right? But by then I was just like, you know what, it's just my paper account, like whatever. And I ended up walking away, making breakfast, coming back, and TradingView had resolved the problems. And turns out I had sold me short, and I was up like 650. So I ended up just selling short, or getting out, down here when I realized. So this is not a trade that I meant to take. Neither was this right here. So, yeah, TradingView needs to fix that. I'm not sure why it lags so hard when news comes out. But if you don't believe ICT saying, don't push the button on high impact news, go in and even on your paper account, and you'll see that the lag is insane. Like it was saying, could not fill your order, please contact your broker, which has happened to me with live funds when I first started trading, because I didn't listen, right? No one listens. And even on the paper account, it lags. So I think it's a problem with TradingView's integration. I don't know if it's a problem with your broker. So that's something I need to fix. Anyways, let's get this off. And you could see actually we end up coming down and taking out the previous day's low down here. So that was basically the end of the move. And then we kind of just went into consolidation again for the rest of the evening. So obviously on the 5 minute, there's nothing really here that I like. If you were on the 1 minute, you might have caught like this move. I saw some people caught a PM market maker sell model right here, right? So you have this U shape. And so they caught this move right here. If you narrow it on like a 1 minute or something, I'm sure there's a fair value gap here with a nice 5 minute order block right here. And so price was rejecting, and finally gave way down here without taking out the low day. So that's why you take partials. So if that is not clear, if you want, you guys can screenshot this. But remember, what makes this a breaker is you have the high, the low, the higher high, and then price runs through that, right? And so people who bought this as a breakout thing is going to go higher are now trapped when it comes back down. And their stop loss is probably going to be down here as they're chasing. So now they're stopped out when it breaks this low. And people who sold short right here, right, they thought this move was the topping out, they're going to be stopped out when price breaches this high right here. So that's what this X is. It's a short-term high. So if this is not clear, let me know. I'll let you guys screenshot this if you want. If not, you can just go on my Twitter and you can find the recap. But also, it gave plenty of entries after this volume imbalance. Here's another one. Volume imbalance here, it hits. And then here's an IOFED on a volume imbalance right here. It doesn't even enter it, right? So institutional order flow integral hitting the volume imbalance to the tick right here, and then heads lower and takes out sell side right here. So, and if you want, you can even drag this guy out, and you see how the wicks are hitting this one right here as well. So, and I mean, these volume imbalances are awesome to use for entries, like this one right here. Displacement down, comes up, hits it, heads lower, right? So there's plenty of entries to be had on these. Don't always remove them off your charts, because right here you can see this one was used as a discount array, and once we close below it, it's now used as a premium array, because candle comes back up here, hits the order block, hits the volume imbalance, and then heads lower, right? So That is inversion. Let's do, let's go for some questions now. I've been on here for about 30 minutes, so usually these usually go like an hour 45, so I want to kind of not go that long and have more time for questions. So, what's up, AMD? What's up, crypto from Pakistan? That's awesome. What's the indicator for the boxes? The indicator, it says boxes up here, but that's actually not what it's called. It is called Futures Exchange Session 3.0 by Infinity Trading, I think is what it is. So look this up right here, and I will show you my settings. If I hit read more, let's see what happens. Yeah, here we go. If you want, I can share it. How do I share the indicator? Anyways, this is what it is. Go look it up, add it to your chart, and then I'll share my custom settings that that show you, because I have the times kind of altered to where everything kind of flows back to back, even though this is over the full session of Asia, meaning I have it kind of extended, right? So here is for the first box, or Asia, right? These two. And I'll kind of, you guys can obviously replay this and go back and find the settings or screenshot right now. Second box, I have this as blue, and then third, which is New York, AM session, I have as purple. And these are the times, and then I'll scroll down. You can see the rest. Should be just default. Okay. I think everyone should have enough chance to screenshot. Yeah, so that's the boxes indicator. It's just a nice little helpful thing to kind of toggle on and off, right? Like here's a classic, here's like the reverse of this day, right? Here's a bullish day. You have accumulation, manipulation in London makes the low of the day, and then you have the distribution right here, right? Nice day. It's like the opposite of this day. So pretty cool to just kind of just go back and look at all the days, right? Without having to manually mark it. But I definitely recommend, I say this every stream, have a chart for your opening gaps, have a chart for your previous day's highs and lows, and segment them off. And if you really want to get fancy, I like to use the weekly profile as well. I don't look at it all, during the day all the time, but I will have a 4-hour chart sectioned off, so I can see, like obviously Tuesday low week, weekly profile, right? Week starts, market drops down on Tuesday, makes the low of the week, and you have expansion higher after this retracement. So this was the Tuesday low week profile textbook right here on this chart right here. So it's just kind of something cool to have. Gives you a nice narrative bias if you're into those profile things. But I'm usually using Power 3, and I'm usually using the 8:30 open, the 12 o'clock midnight open. I'm not really a PM session trader because I find that a lot of the moves, happen in the morning, right? And the PM is usually lackluster. But when you have seek and destroy, or you have like a high resistance liquidity run condition in the morning, a lot of the times you'll get some nice moves towards the end of the day after it's consolidating all morning. So it is a trade-off, right? I like to trade the mornings and get my piece of the pie early with this trade right here. And then once I got this trade, I wouldn't have touched anything else, right? I might have held runners if I could have, but 10 o'clock news knocked me out. And in hindsight, if you really want to get technical and, always, when you're trailing your stop, do you see any candles that make sense or any order blocks after price came down? And I scaled right here and I scaled right here. Do you see any green candles that make sense for me to trail my stop above any order blocks or anything? No. This was a low probability order block. Like, look, it's just a hammer candle, right? These are nice and thick. If I just kept my original stop, right, I still would have been in the trade. Price, you can see these order blocks right here actually ended up repelling price, right? Comes up, hits it, almost, just below mean threshold, and then heads lower, lower, lower. So if I just kept my original stop, I would have been able to capture this whole move down, right? Or at least into the original target, terminus of original consolidation. I could have at least captured that, but I got stopped out for break even once I took partials and moved stop to break even. So, hindsight's 2020. That's just That's just part of trading, right? You're not going to get your full target all the time. So that's just how it goes. But this is basically what I had on the beginning on my chart with a little bit more detail for you guys when I opened them up. So if you want, you can screenshot and I will, or go on my Twitter and find it. But I'll just keep going through these questions. What's up, Adil? How you doing, bro? Yeah, trying to exit through the news event, tough. I think, like I said, it happened on paper too, not just TradeStation, who my broker is. So it makes me think it's a TradeStation integration issue. I kind of want to try trading directly on the TradeStation, on the TradeStation client, not on TradingView, but maybe chart and trade one day just on the TradeStation client and see how different it is with the fills and all that, to see if there's a big difference. Can I show the different legs of the sell model? Yeah, let's just clear everything off real quick. So you have, let's just call this whole Asia range original consolidation. So you have, let's color credit too, just like the charts. Original consolidation. And you have your first accumulation. Let's make that blue, just like in the diagrams. You got your second. So first, second, and then you have your smart money reversal up here, which is actually a breaker, right? Because honestly, you could conclude this little portion if you wanted to, because you don't have to have two legs of accumulation, right? If you go and watch his market maker model videos, I don't know the exact title, but if you go and watch his videos, he even says, one, you don't even have to take out the original consolidation in a sell model. It could just come down and take out, this first leg of accumulation right here. But and that's why we take partials, which is what I honestly thought was happening right here. I was like, damn, they're not going to take out the original consolidation, those clean lows, and they're going to run it higher after I got stopped out. But like I said, these are really the only things, only reference point that would actually reject price, because this is low probability right here. And you also have these volume imbalances and things like that might want to get ran through before price goes lower. And so that's basically what happened. So you have your smart money reversal up here. I'm just kind of put it overlapping right there. And so the highest, what you want to see is a breaker formation in the smart money reversal. You don't have to, but it's always better to see that. I love seeing that because that these people have been stopped out, right, above this high. Okay. And so there's not going to be a reason for them to bring price up higher, because smart money's already sold short into their stops up here. So they're going to sell short up here. So why would they bring it even higher, right? So you want to see that breaker formation in the smart money reversal. That's ideal. If not, you'll see something like this. Let's say this move wasn't here, right? So let's make this white. Let's say this move wasn't actually here and it was just a straight couple green candles up, and then you had this move, right? So the 2022 model with the displacement down, right? This would be a failure swing higher, okay? And so that would be your low risk sell in a sell model if price just ran straight up. And so that would be your failure swing. And so once price comes down, breaks this low, and then hits the bottom of that failure swing right here, this is also a bearish order block. And once price comes down and hits that, you could be a seller right there. So that's the failure swing concept. If you don't get the breaker formation right here, like we're pretending we don't have this, this would be your failure swing, and you'd come and you'd sell short right here on this order block right here. So if you want to try and call tops, you could be selling short turtle soup above here. You could sell short low risk sell, and if you want to wait for confirmation, you could sell short right here on the failure swing once you realize that we are reversing and we have our sell side of the curve. So that's like the buy side of the curve. Let's mark out the sell side. So this would kind of be your return to support or first stage distribution right here. Let's mark it. So let's mark it off. Smart money reversal. Okay. Consolidation. You have your accumulation, your reaccumulation, your first stage of distribution or return to support. And then you have basically your second return, your second leg of distribution right here that comes all the way up into what we said, a premium, right, of this whole leg down. And it hits optimal trade entry right here and hits this order block that we drew out earlier, right? So there's your second leg. Oh wait, I didn't mark it. So second leg, and then obviously silver bullet, right? If you're selling short on the second leg of distribution, that's the most violent move usually. And so you get, some chop, and then you get the violent sell-off, right? These are 2 5-minute candles, violent sell-off that basically went below this low, 10 handles, right? So here is your sell-off. And so this thing just ran down to previous day's low and then started chopping around. So that's basically the legs of the sell model. And I'm not going to go on a smaller time frame because it's just going to look really choppy. I'm sure there were a bunch of little entries and scalps you could have gotten. I'm looking to get my piece of the pie with a clean move on a higher time frame. And when it's like this is perfect in my eyes. So let's keep going through these questions. That was a Dills market maker sell model question. Am I trading tomorrow? Yeah, probably. Sometimes I trade on farm payroll, sometimes I don't. It kind of just depends. That's the reason why I'm on the higher time frames, because if price action isn't clean in the mornings, and if it's NFP, I'm even more cautious and more selective. So if it's something that I don't like, I'll just sit out and I'll watch or tape read or go do something else, go sit by the pool or something, go work out. Yeah, super clean morning one. Yeah, paper trading has constantly been an issue during news. Yeah, I think I know. I wish there was some other ways to paper trade. I think I think TradeStation has like a paper trade feature, which is my broker, and I think you could create like a paper demo account with them that just says sim when you log in instead of live funds. I might just try that out and see how it works. But I think it's something to do with TradingView's either integration or just their platform in general that lags when there's news. So like FOMC is horrible. Like you'll see, like the whole thing will freeze. Like I couldn't even delete drawings or anything. It was bad. What's my take on tomorrow after seeing today's price action? Well, if we had a large range day, right? So we could get seek and destroy after taking out yesterday's low and all these lows over here. Just call it this. We could get seek and destroy. Let's go on a 15-minute. And mark. Let's just delete all this. Like I said, I like going to these time frames or these charts. Let's make all this normal. My take on tomorrow, I can't really predict the future, but like I said, we could have a nice seek and destroy. For the rest of the week, just consolidate and expand the range. Could see price now want to come either back down here one more time, then go higher to at least. Oh, I hate that tool. Get rid of that. Come down and maybe rebalance some of this. Move down, or it could just do it overnight, right? It's kind of too early to tell. It's only 8 o'clock at night Eastern time for me. It could just kind of want to rebalance and go straight back higher up here. Like, let's look at NQ, these lows right here. Right, see NQ, SMT right here, with these lows are still intact. This low's still intact on yes, right? So look at these lows. Smart money technique. Oh, wait, what? There we go. SMT. So ES might not have to take these lows out, right? NQ's already done so. So maybe now, but also look what's still intact on NQ. These lows right here from the third, which ES already took out over here. So maybe, like I said, these market conditions are pretty tough. Maybe this looks like a double bottom-ish. And you kind of have this, it's not really a trend line. But maybe what they're going to do is leave these lows intact, let price kind of take out this high, and then head lower again, so that you get your seek and destroy pattern. It looks kind of like this, right? And so we come up, take out the high, and then low again. I don't know. I can't. I like looking at. I basically have my opinion formed by the morning when I sit down, because we have a lot of price action that can happen, right? Like 9:30 is this candle right here. So I would basically have an opinion formed by the time 8:30 comes around. So we still have all this price action right here that we need to see what happens with. And right now it's just flat. So I don't really have an opinion, but obviously when we took out the previous day's low, we started chopping. So that's something to be aware of. And it's non-farm payroll week, which is also another thing to keep in mind. So we could get seek and destroy, right? Because if you remember, what times do we get seek and destroy? Let me see if I can find the tweet. Seek, here we go. We get seek and destroy. Give me 1 second. Here we go. I don't know if you guys can see this, but when to expect seek and destroy, right? Or a choppy AM session. Because that's when I usually trade, before high impact news events. Okay, and so tomorrow we have, pull up Forex Factory here. Tomorrow we have, 8:15 non-farm employment change and ISM at 10 o'clock. So we could literally just chop, right, in the morning until 10, and then 10 o'clock might give us a move. But we have two high impact news drivers, one at 8:15, one at 10 a.m. So there's checking off one possibility, right? First one, during non-farm NFP, or non-farm payroll week. That's another check off the box. After a large range day, which we just had, another check in the box, right? And if we have this last one, if the sell side or buy side objective has been met before 9:30 open, which we won't know yet because we need to see more price action. But with that would check off another box. So we already have three things that constitute seek and destroy. The first one being high impact news tomorrow. We have two events, one at 8:15, one at 10. It is an FP week, so that's another one. And we just had a large range day, in my opinion, compared to all this movement over here. So that could be another reason to be cautious for seek and destroy tomorrow. But I usually will make the decision and have a better idea by the time 8 o'clock rolls around in the morning. So we need to see what the deal is tomorrow. But yeah, it's looking like it might be a seek and destroy day tomorrow. I hope not. But, no, you don't always get what you want. So I hope that helps. That would be my take for tomorrow. I'm doing good, Nabil. How are you? Inversion? What is inversion? Sorry, I'm going these questions just scrolling one at a time. Getting closer to the bottom. Inversion is just when a let's find an example. Let's go on a smaller time frame. Over here. In words, I can tell you in words, and I can show you an example. Inversion is just when a discount or premium PD array flips, right? So you might see people refer to it as a FVG flip or PD array flip. It just means that a premium array now acts as a discount array. So what that would look like would be this off the top of my head, let's make this a volume imbalance. This volume imbalance right here, see how it supports price and then rejects price? So it gets supported right here, goes higher. Or you could even do, this is good. When this supports price, right? So it's acting a premium array, a discount array is acting as support. It now acts as resistance right here. And so that has flipped. And you see the body respects it right there, but there's a little bit of overlap. It's not the cleanest example, but this is basically what an inversion is. And it happens on fair value gaps, volume imbalances, and some other PD arrays as well. Let's see here. Yeah, I don't usually trade NASDAQ, but I'll look at it. Like my SMT chart looks like this. You guys can see it. This is on my second monitor. I have the dollar, usually in the 15 or the 5. And then I have, I'll kind of just swap over. Yeah, you can see what we've kind of been selling off. And I have, Dow, NASDAQ, and then ES down here, all in the 5 minute. And this is all I look at. And sometimes if I'm trading, I'll look at the 1, but I don't really trade on the 1 anymore. So 5 minute, but it's basically been staying on. But I can easily cycle through the time frames right here and compare to the dollar. Put it back on the 15. So that's my SMT chart. Do I have a Discord? No, I do not. Everything I do is on YouTube and Twitter right now. Everyone's been asking me, do I have a Discord? I do not have one. I have a personal one. It's just me in there though. All I do is post recaps and like take notes and stuff. Thanks, Giovanni. Yeah, I try and explain stuff and answer questions the best of my ability. If I don't know the answer, I'm gonna tell you I don't know, because I don't want to teach something that I don't know about. So, like, I remember someone was asking me about the event horizons with the opening gaps when he first introduced the opening gaps and stuff, and he was talking about it. And you know, I wasn't familiar with them, and I didn't really know what they were, so I didn't talk on it. Just skipped over the question after I'll admit to you. But now, I if you want me, I can, like, an event horizon is basically 50% between two new opening gaps, right? Here and here. And basically, all it is when price basically comes, around the 50 and then starts to get, away from the 50, the further it gets from the 50%, this is going to act like a black hole, right? It's going to start pulling price towards it. And so the further away it gets from equilibrium right here of the new opening gaps. So that's basically what the event horizon is. Other than Ethereum and Bitcoin, they are correlated pairs in cryptocurrency defined as SMT. I don't trade crypto, so I wouldn't know anything about. I'm sure all cryptos everything's correlated to Bitcoin. I'm assuming, just from like my basic knowledge. I have crypto portfolio, but I'm not like actively trading it. But I'm assuming you could get SMT with some pairs if they're super correlated, like the Nasdaq and ES. But that's something I would ask one of the crypto guys who trade ICT with. Machine gun keyboard. Can you hear my keyboard when I type? Sorry. My mic is super sensitive right now. Do you trade the London session or only New York Open? No, I live in the US on the East Coast, so I don't trade London. I trade New York Open. I usually sit down around 8 o'clock when London's ending, or has already ended. And so I can kind of see what has been done. I was kind of scared that we were going to get seek and destroy right here, because this kind of looked like a decent move. But in hindsight, it was really only like 23 points. So, yeah, I was kind of scared. And these look really clean. So I was like, if we're going to do anything, we'd probably just retrace and chop down into these lows or something. But we ended up getting a nice sell model. So I ended up entering short after I get, derive the narrative, and I felt comfortable taking a short. Yeah, so I basically only trade, to answer your question, New York Open, and then I'm usually trying to get my piece of the pie before lunch, so I can have the rest of my day to do what I want. Don't want to overtrade in the afternoon. Yeah, I was messy in the 1 minute. Yeah, Thinkorswim has paper trading. I used to trade options, and so I would always trade. My broker down here was Thinkorswim, or TD Ameritrade, in their Thinkorswim platform. InterTrader Sim. Yeah, low resistance liquidity under the downside. Yeah, this whole move up, like, super clean. Just large liquidity void right here. Large liquidity void right here. Well, I guess it's kind of supporting price right here, and then it started selling off. So yeah, liquidity void, which is also a 15-minute fair value gap if you look at it right here. And then, just nice clean lows and big fair value gaps until we finally get these equal lows down here. But yeah, 10 o'clock news was probably got a lot of people thinking we were going to go higher off this support level that retail sees. But you see what happened, right? Even this would be an example of an inversion. Right here, this is a good example. This fair value gap right here that was at a premium at one point, right? Because price was above, did not support price, right? So what's it gonna do? It ends up keeping price at bay or rejecting price. So you see how the bodies stay within almost that 50% or the consequent encroachment of that fair value gap. Right? Boom, right there. Just a tick hot, maybe just not even a tick. It's literally, it's just an overlap on the chart. Yeah, see? Well, it's something on TradingView. I don't know why it doesn't line up, but yeah, you can see this was an inversion right here, and on the 5 minute, it was a liquidity void. So, pretty clean. Let's see. Man really meant it when he's gonna be in the dark this week. Are you talking about ICT? He hasn't tweeted anything yet, has he? Which has kind of been, nice and refreshing. I don't have to like have TweetDeck open to look at it. Also, something funny that happened today. I'll keep going through the questions. Something funny that happened to me today. Let's see how many viewers we got right now. About 80 something. What's going on, everybody? I think this is the most I've ever had. I'm not gonna lie. This might be the most I've ever had at one point or at one time. But yeah, something funny that happened to me today. Let me pull up my email, or let me open Discord real quick. I got auto flagged for a community terms of service violation for typing something. Literally for typing SMT. Like, look at this. This happened to me today, and I was trying to, this is why I didn't even trade the rest. I was trying to figure out what the hell happened. My account got locked, and I thought I got banned or something. It says, we've temporarily limited, this was literally today, this morning, after I posted the market maker sell model trade recap. It said I was promoting or encouraging suicide because I tweeted, and I was like, what did I tweet that did that? I got auto flagged for something. It said you can either just delete the tweet and then wait 12 hours to get your account back, and it would basically end up giving me a strike on my account. And I was like, so I hit start, and I was like, what the hell, like, did I tweet that, auto flagged me? And it was this is the tweet. Someone said something about YM, and I just replied and said, yeah, SMT with YM so far at the lows. And it literally flagged me for encouraging suicide, and I was like, what the fuck? So I appealed it and ended up getting my account reinstated. So yeah, that was some bullshit. Yeah, like, look at this. Account's been restored. So yeah, that was some BS. I was dealing with that today. Let's keep going through these. I want to make it through so we can chill. And we didn't take previous day low and NQ. Yeah. You explained things so well. Thank you for doing these. No problem. Yeah, I think Tuesday was high week profile. Like, if you look at the 4-hour chart, right, the weekly profile, and just like it just looks like we're gonna have the accumulation, right? The manipulation on the week was this move right here. Above these equal highs, and then like this is just like accumulation to me. And then we had manipulation, and it looks like we might come up higher back into a premium or something, like up here, the 50%, and that would balance out this liquidity, basically this whole run up. Maybe we hit this order block or something. This is all just hypothetical. Maybe we come up and hit that, get people thinking we're going to go short again off this. So maybe we don't get Seek and Destroy and take out this high. Maybe we go lower down here, take out today's low, and we start taking out like, let's go on the daily. Oh wait, let's switch over. Maybe we go lower and where's my, there we go. Maybe we go lower and end up filling in some of this liquidity void right here, like all these, this whole thing right here. Maybe we dig into that, or they could just keep sending us to this level, right? But you do have, if you look on the side by side, what do you have so far? Higher high, lower high, right? And we're going into a new quarter, right? Quarterly shift, okay? So maybe we don't have to take out this high on ES because NQ's already done it. And maybe we come down to these lows right here that look like a double bottom, right? Not trying to call top or anything, but we are in a deep premium. We are in OTE territory after hitting this. This is pretty much balanced up here. All this back and forth is pretty balanced. So maybe we don't have to take out this high on ES because NQ's already done it. Maybe we head lower from here. I'm not trying to call top, obviously, but it's just something to think about. And when you go on the weekly chart, let's delete all this. Let's go to ES1. Let's look at the weekly. You do have, here's what retail sees, right? Or something like this. Kind of looks like a trend line bounce up. But here is what we see. Oh wait, I have to hit. Did I do it right? I guess I did. Hold on. A BPR that we hit after. I should probably name it BPR, shouldn't I? Equal highs or buy side liquidity that we took. Okay, so they see a trend line breakout, retest, and buy. We see BPR, we almost hit today or this week. And it looks like a weekly rejection block right here of it. So let's do negative RB and make it red, right? These highs right here. And you have SMT right here so far with NQ. It's getting kind of messy now, but now you can see we also have mean threshold of this order block on the weekly, okay, that we tapped right here. So now you're starting to see where, you know, we're starting to differ from retail logic of trendline break and retest right here versus what we see, a liquidity grab in a deep premium up here, respecting this order block so far on the weekly. And we do have, you know, relative equal lows right here that we could end up taking out as well. So who knows? We're kind of at a turning point where we could either just bust through here and head for this high or these highs at least and can continue filling in this BPR, or we could maybe reverse sometime in the next couple of weeks and head lower. It's been pretty sideways though, so I really don't have any expectations. It's just been a tough market, to be honest. Like, it's been pretty much sideways since the beginning of 2020 right here. We've kind of just been chopping around. So it's like preseason basketball. But that's basically what I see. Let's refresh all this. What is this drawn? Yeah, this liquidity void. Okay. So, yeah, that's basically what I see on the weekly. So I hope that answers your Tuesday high of the week profile. I kind of got on a tangent. 415 5-minute fair value gap is a good example of an inversion. 415, that would be 16. Wait, 415. Am I retarded? Oh, 4:15 in the morning, maybe? Is that what you're saying? Oh, this one right here? I thought you meant 4:15 in the afternoon. Yeah, like this is a good one. If this is what the one you're talking about, you have price come, support. So discount array acting as support and supporting price higher. And then once price closes below it, obviously a 10 o'clock news, so we'll not worry about that. But right here, once we get back below it, price comes up, hits it, and you also have a fair value gap here that price enters as well. And you have a volume imbalance right here that price hits. So you have a lot of confluence right there. And when things start lining up, right, and you also maybe can attach a premium to discount. So we hit above the 50, you can be a seller with all these premium arrays and this, inversion fair value gap acting as resistance. So stack the confluences. Bitcoin, Ethereum does SMT. Okay. What do I think about crypto? Does ICT work on it? I have no experience on it, but yeah, I've seen some. I had a Bitcoin chart that was crazy. Like, let me see if I can find the chart. Like, this thing was. I was talking with my boy Adam. He was shorting. Here we go. Look at this. Oh, it's too large. Hold on. How do I copy let me jump to the message real quick and I can paste it in here. Copy image. It's saying the image is too large, but if you go here, I'll post the link. I'll find it in my tweet. Hold on. Here we go. God, I searched Bitcoin on my Twitter and it's just a bunch of retail. Oh, here we go. Okay, here's the link. Copy link. I'll post it in the chat and you guys can go look at it. There we go. Go click on that link and you'll see what I'm talking about. That shit is scary accurate. Like, you look at the timestamps. That shit is scary. Do you section it off yourself or is it a setting? If you're talking about the days, it's just a vertical line. So the tool is vertical line or just Alt V. So if I just do Alt V right here, it places a vertical line and I can change the width, change the color, change the opacity, right? Oh shoot, what did I just do? Trying to reset it. There we go. Yeah, just vertical lines, and I do it manually because I find that doing it manually instead of having indicators sectioned off for me every day forces me to get my hands in the charts, forces me to actually think about it, right? Because if I just looked at this and was like, oh, okay. But if I have to go on here and like draw out each line for high and low of the day, draw out each day, segment it off, it gets me thinking, okay, today was Monday. All right, what am I marking out? I'm marking out Monday. Okay, previous high, low. Okay, what are we doing right now? What is price doing? What state of delivery is it in? It's in consolidation, it looks like to me. When you zoom out, okay, you want to get too framed in on like a 1 minute. And then when you, in this fractal of price right here, like this small section, the Asia range, it's also in like a consolidation, right? Within this larger consolidation, if you want to call it that. So these equal highs, you know, combined with these, looks like it's just resistance, price runs above, and that's how I formed the manipulation in London bias and wanted to see these lows taken out. Did I think we were going to get to this previous day's low? I didn't even think about it, honestly. I was happy with just catching a trade from here to here, right? Because that's all you need to be profitable each day. You don't need the whole move. I didn't even get half of it, all right? But I got enough, right? So yeah, I don't do it, I do it all manually because it forces me to think. Can you please show the box settings again? Yeah, sure. I'll show them again while I read through these. Thanks for the info. Can you talk a bit about what you did practically when learning ICT concepts apart from taking notes? Like taking notes, like if you had backtesting process. Honestly, my backtesting was just I'd learn something in his video and I instantly go to the chart to see if it was true. Because I came from trading trend lines and using order flow and doing all that. So I was like, there's no fucking way. And I go and look at the chart, like right after the video, and it would be right there in front of me. I'm like, what the fuck? So I was just getting like super into it. Like I went down the rabbit hole, dude. I'd watch a video or two every night. And then I'd rewatch the videos after I finished them. You know, writing down 3 things. I can tell you how I learned it. I learned it in 2020. Before... I learned in 2020 before he dropped the 2023 mentorship. So I only had 2020 mentorship and, you know, before he even dropped core content. So that's all we had, along with like the Forex playlists and like the some of the like Sniper Scout series stuff. So I basically only had a 2020 mentorship and any other, like, I guess you'd call it pirated lessons that got leaked. And So I watched 2020 mentorship, ended up going halfway through, and I was like, oh, I got this. This is easy. Don't need to watch anything else. Ended up trading with live funds too early. Made like 23% my first month on a hot streak. Like I was going like 7 for 8 on trades one day. I remember the day. And I was like, I can't fucking lose. I was like, this is a cheat code. And ended up like stopped studying. Didn't even finish the 2023 mentorship. And then I got humbled real quick. I was up 23%. Went all the way back down to break even on my live account. Do you know how many paper cuts that takes to go from up 23% back down to break even? And do you know what kind of toll that takes on your confidence and your mental state? Like when you do this full time, like it was, and when I say break even, I'm talking about like I opened up a futures account, like, cause I didn't used to trade futures. I was trading options. I opened up a futures account, right? So I got basically break even, back down to break even on my futures account. And like, I was like losing trade. Might win one or two, get lucky. But I was just losing. And so my confidence was all time low. I ended up taking a step back and I was like, okay, once I hit like big break even, I was like, whatever I'm doing isn't working. So you have to be brutally honest with yourself. Whatever I was doing was not working. Because if it was, I wouldn't be fucking break even up from 23%. Okay. So I stopped, took a step back, took a break from the charts, like everything, stopped trading for a bit to clear my head. And then I came back, finished the 2022 mentorship because I was like, there's obviously something I'm not understanding here. And because all I do is trying to trade the 2022 model on a 1 minute. So I was just getting chopped up or getting offside or not, not looking at the higher time frames. Like there were so many things I was missing because I thought I knew it all. And so I took a step back and I rewatched the 2022 mentorship from the beginning, wrote down 3 things, the most important things from every video that I thought were the most important. That way it was kind of like a table of contents. I could go back at each episode and see what he talked about, and also help me remember it. So watched that all the way through. And this is while I was tape reading live in the market every day and back testing sometimes at night. And then, but like when you get to a certain point and you find like your model, or you're comfortable with your trading, and you're obviously going to keep learning, right? But you get to a point where you do it every day, at least for me, that you don't really need to back test anymore. But it doesn't mean you shouldn't, right? Like, cause right now I'm basically back testing with you guys. Okay. So like, this is my back testing. So like there might be a point where you get to a point where in your trading, I'm not saying don't back test, but I'm saying you might get to a point where you don't need to do it as much, if at all. Right. And like, so this is my back testing. Posting those recaps on Twitter, those are my back testing things. Posting my recaps in my private Discord where it's just me, that's my back testing. Right. And I'll scroll through those examples if I have a bad day. And I'll say, and I get down on myself, I'll be like, okay, I'll scroll through those examples and be like, look what I've done in the past. Like I have this, right? I know what I'm doing. I might have just been wrong today, or I might have just got caught in offsides today, or forgot about this, or, you can't be perfect every day. So even though you can try to be. So yeah, that was kind of like basically what I did. Oh, so I watched the 2020 mentorship, wrote down 3 things of each episode. And then I watched core content 1 through 4. Okay. And then I rewatched 2022 mentorship again with more detailed notes. And then I started following along. By then, 2023 mentorship had come out. Started following along a little bit with that. Learned about new opening gaps. And I basically at the same time was just going through core content that interested me. And I've pretty much gone through every single video that he has now. So with the exception of like maybe like some swing trading stuff, because I don't really swing trade. But eventually I'm going to go through every single video he has. Thank you, Adil. I try and teach some of the stuff on here. I'm going to teach stuff I know. I'm not going to just sit here and, pretend I know everything. Dollar, Dixie, this means the dollar, US dollar. Yeah, he would say SMT don't get booted off YouTube. I almost tweeted that, but I didn't want to push my luck. I was like, damn, the algo's trying to silence me. Like, we're too powerful with these concepts. Trying to get my account banned for giving out plays on daily bias on Twitter. Is the lowest time frame I use 5 minutes? Yeah, I was talking with my boy Sniper. If he's watching, shout out Sniper in the Twitter DMs. And he was saying that, I've just been seeing a lot of the guys who trade on Twitter A lot of them have been trying to get off the 1 minute, which I've kind of been doing the same thing recently. And I was talking to him, and he was like, dude, when I got off the 1 minute, I started passing challenges blindfolded, because it forces you to remain patient and really forces you to zoom out. So he enters anything up to a 1 hour. So he was like in a gold trade when I was he was in a gold trade when I was DMing him, and he's like, yeah, dude, like I'm in a gold trade on the 1 hour right now. And he's off like a breaker on the gold in 1 hour. So yeah, that's why I have the 1 hour, the 15, and the 5. Like this is the lowest time frame I'll go down on now. I'm just kind of seeing how I like it, and so far it's been really good. You really don't have to look at this and get super stressed out, right? Like, oh my God, like looking at every single little candle form, like, dude, it's so tiring. Like I do this every day, and it's just so tiring. So the ability to get on a 5 minute and have the patience and have like every one of these candles 5 minutes time. Like I have so much time to like see if this is something I like. It's not just 60 seconds, then 60 seconds, 60 seconds, 60 seconds. And then, now it starts selling off 60 seconds, 60 seconds. It happens a lot quicker than you think on the 1 minute, but on the 5, dude, you really see the big picture for the day, and you really can catch some nice long sustained moves. Like on the 1 minute, you might be thinking, oh my God, it's going to reverse now. Like you're trailing your stop, here you get stopped out. But like you want to find the time frame that works for you, obviously. But for me, the 5 minute is the lowest I'll enter on now. Until, obviously I was profitable on the 1 minute, but I ended up taking just a lot of dumb trades on the 1 minute because I would either get sucked in on a lower time frame and forget the big picture stuff, or I would be trying to follow on with ICT on the tweets. And I made it a rule for myself not to look at Twitter, especially ICT stuff, or Discord during trading hours, right? And the only time I'll get on Twitter is really either I'm done for the day, I want to post a recap I just took, and that's it, right? I don't have Twitter open. I'm not just glancing at everything as I trade. I have nothing up. All I have is this chart right here and this chart over here on my second monitor. That's it. I don't look at anything else. And if I want to look at ICT's tweets, I will go on TweetDeck, which is this website. If you don't know about this website, right here, you can go to tweetdeck.twitter.com and log in. It's by Twitter. It's safe. You can customize, have a certain user right here that you want to watch all their tweets, all their replies, notifications. I did not have like a list called market news. I don't really trade news, but it's kind of fun to just have and like glance every once in a while. Like if, FOMC comes out and I want to see, what the rates are, whatever. This is basically what I'll look at. I don't have to toggle it on and off, but this is a good way to follow if he's like tape reading through Twitter, which I hate. Like drag a 1 minute FPG 945 to the right of your chart. It's like, dude, are you like, people are really actually trying to follow along. It's just, I think the 2022 mentorship is better than the 23, in my opinion, but everyone's entitled to their own. My message is blank for you. Can you guys not see that link I sent, the Bitcoin? Let me know if you can see that link that I dropped. If not, I can drop it again. Okay, you can see it. Great. Do I use seasonal tendencies? Yeah, but not like I don't trade off them. It's just another confluence thing. I'm not sitting here like only looking for buy. Like I want to see the price tell the story, right? And if seasonality is bearish, right, then I'm gonna start looking for it's not gonna affect my bias, but I'm gonna have that in mind as I look at the daily chart and the weekly chart and the monthly chart. How do you decide whether wick or body of the order block will matter? So I'm getting down the list. I'm getting closer to the bottom. It kind of depends. Like, let's go on the 5 minute again. Like when I was talking about a low probability order block, like this doesn't even look like an order block. I like to see nice thick green boys. Okay. You want to see nice thick green candles. This is a low probability order block. Like this for me isn't enough, even though it respects it right here. Okay. Or you could do the whole thing if you want. But like the wick, and if you want to measure the wick, look at that, hits the 50% of that negative order block right there. So like if it's a candle like this, I'm going to use the wick. Wick low to body opening price. Okay. And then I'll also keep in mind the 50% of that wick. That's when I'll use the wick. But if I'm going to use the bodies, right, then I'll look for something like, let's go to yesterday. This is a good example. Where's 945 yesterday? Here we go. So here is, let's frame it. Here's 930, okay. Here's when I would have sat down at the chart. Wait, what the hell? Get rid of that. I just not around 8 o'clock. So let me turn on the boxes. So we have Asia, London still chopping around. This looks pretty clean to me. I was actually going over this yesterday with somebody. But look what happens here. You have a liquidity grab right here. And what does ICT say? Where's 830? Okay. So you have a liquidity grab here, right? And this, honestly, I'm thinking this might be a breaker now, because look what happens. We take the low out here, but do we displace below it? No. So it's not really a shift. It's just a liquidity grab because we come straight back into the range. And don't worry, I'm going to get to the order block in a second. But right here, we don't displace lower. We take out the low and immediately come back in the range. So now I'm thinking, okay, that was probably just a liquidity grab. And if you look at ES, or maybe it was YM, how do I, YMM. Oh God, hold on. What did I just do? Let me just look on my SMT chart real quick. Back over that. Here we go. Okay. You actually have, where is it? That was SMT. Anyways, this is what I was thinking on right here. And I didn't trade yesterday because I was traveling back from a weekend away. But in hindsight, I saw this, right? You have a liquidity grab, quick move back into the range, and then you finally get a market structure shift when this clean high right here is broken right here, right? But right when price breaks above these candles right here, right when it breaks above, this is now a valid order block, okay? But all three of these candles. But you want to see price come down into a discount to long, okay? And so you're trusting that the algorithm is not going to want to break lower than this right here because these people have already been stopped out long because they've trailed their stop up right here thinking it's going to go higher, okay? You have equal highs right here. Buy side liquidity. So people think it's resistance. So people were now selling short right here when it breaks this low. They think this is where it bounced before, so it should bounce again, right? Well, right when it breaks this low, there's people out there who are going to sell short on that. They're breakout traders. So they're selling short right here. There's people who are stopped out long right here. So they're not going to want to give these people a chance to either get out of their short as it comes back higher, and they're not going to want to give people a chance to the people who were the people who sold short here to get back out. So what they're going to do is they're going to take it higher, right? So they're bought their stops right here, and they're going to offload it above here, and also this high over here. Let's make that buy side. Here we go. So now that you have a shift, what can you do? You can look for price to return to a discount, right? So you get optimal trade entry right here. Hits the 50. Hits the 50 and also hits this order block, this opening price right here. So this is where I would use the body. Let's move this back a little bit. This is where I'd use the bodies, right? Because there's not really a wick on that one. Even though it's all three of these candles, you could, if you wanted to, take the entirety of those candles into the mean threshold out, and it almost hits it, right? But we're looking at, there's a fair value gap here. Okay, that supports price. There's an order block here that supports price. There's also the equilibrium right here is going to want to support price, or they're going to bring it back into a discount. There's also a volume imbalance right here that supports price. So there's all these little confluence points that you need to be aware of, right? And so when you stack them like this, it's easier to trust. And if you actually look at 8:30 opening price, which is right here, that is another confluence. So you're going to trust, and look at that, to the tick, 8:30, 41.31, low of this candle right here, top left, 41.31, right here. So you're trusting the 8:30 opening price, volume imbalance, fair value gap, after a market structure shift with the liquidity grab right here. It's all narrative, right? You're trusting. And I know it's scary at 9:30. I would always get scared when I first started. But I've been doing this for so long now that you trust it. You trust that narrative, and you trust that obviously we've been going higher, higher. So why will we not? I know this is equal lows, but the fact that we didn't continue lower after grabbing this and we had a shift, like I wouldn't buy in this candle right here because there's no shift, right? Especially with these clean lows, I would want to see something to get me, to get my long idea confirmed. So this would confirm it for me. This market took a shift back down. And even if you didn't want to buy right here at the order block of the volume imbalance or any of this stuff right here, you could just wait for the reaction to this candle right here, right? Wait for this one 5 minute candle. This is 5 minutes of price action right here. And at one point it was big, bold, and black. That sounded kind of sexual. At one point this is big and bold candle, right? But you could just wait for the reaction. And if it closes like this, well, you've seen a nice, it's respected the volume imbalance to the tick, 8:30 to the tick, order block almost to the tick. It hasn't closed below the fair value gap, actually closed above the consequent encroachment. So this right here, you could be a buyer when this candle closes. Stop, still below here, and then you can target, use fibs for targeting. Here we go. Right here. So we're going to target negative standard one deviation, and there's buy side above that, right? So we would use buy side. So boom, right here, you would take partials. You could even take partials above here if you wanted. So let's see what that trade looks like if you got it on the close of that candle. Stop one tick below. And if you really wanted to aggressively, you could put like below the body, below mean threshold of this candle if you wanted. Depends on what your risk tolerance is. But I think 5 handles is a really good stop for newer people. So look, 1-to-1 trade, your 5 handles that ICT talks about. 1-to-1, one tick above here, right? You get 5 handles and 2 ticks, okay, above these equal highs. So boom, there's your 5 handles. You could be done for the day. Maybe you have runners. You hold for the 1 standard deviation right here. See price hits the 1, takes out buy side, stutters a bit, retraces, goes higher to the 2, negative 2.5, and you see it stutters again. Let me draw this out right there. Right there, and then we kind of get a reversal, and I can go on and on if you want, but these could be your price targets right here. So we eventually retrace somewhere around the negative 2.5, and then you get your lunchtime lows taken out right here. Oh shoot! Right after 1:30 opens, okay, 1:30 drops down. 1:30 is right here. 1:30 starts, drops down, takes out lunchtime low for continuation higher. So, and we end up rebalancing up to here, and then you can see price starts to chop around after we rebalance this liquidity void right here. So that is basically when you would use the body and not the wicks. Just kind of depends on what the personality of the candle is. Share my chart background colors, yeah. Sorry, I'm going through the questions, guys. I'll speed up if you need me to, but I'm trying to give detailed answers and not just quick, short answers. Because I know the detail is what you want to know. You can't teach this stuff and it's also experience, right? You can't teach this stuff in like 1-word answers or 1-sentence answers. I'm using this background color above the yellow right here. It's just the white above the yellow. I used to trade crypto. My only advice is to stay away from crypto Twitter, or just stay away from Twitter in general. I start my private Discord because you always type for yourself. Yeah. Love the analysis. Thank you. Yeah, I'm trying. About an hour 30 in. Yeah, I love ICT concepts because it's like a puzzle. Each day is like a puzzle you got to figure out. And if you can solve the puzzle, you can make money. How often do you plan to stream? Or just when I feel like it? It's I try and do it once a week. Last week, I was kind of sick recently, like a week or two ago. So I didn't really stream that week. That's why it's been a little bit since I've streamed. But try and do it once a week. Especially if there's like a nice trade I catch or the price action is really clean, like today, then I'll do a stream. It's kind of just spur of the moment. But I always try and do it at 8 o'clock at night when everyone's off work so they can watch. Do I do prop firm accounts? No, I don't. I just trade my own money. But I've thought about getting a prop firm account just for bills. Having a prop firm account just to pay the bills, and when I hit a certain threshold or percentage or whatever I deem the rule is, whenever I get one, or if I get one, I don't know if I'm gonna do it, but I stop trading on that account, right? So that's made my money for the rent, for whatever bills it's gonna pay, and continue trying to grow my personal account more aggressively. So when the founder of ICT talks about 5 handles, what is 5 handles and 4 handles? 5 handles is literally just if you go from 4140 right here to the right, 4140 up to 4145. It's just handles are just the same thing as dollars, right? So from here to here, this 5 right here has 5 handles, and every 25 cents in between is a tick. So there's 4 ticks in a handle. Okay, 4 ticks in a handle, or 4 quarters, right? So we go from 40 to 40, 25, 40, 50, 40, 75, 40, 41. So that's one handle with 4 ticks in it. So we can go 5 handles, right? So if you do 5 times 4, that's 20 ticks in 5 handles. It's just simple math. Where can I learn about seasonal tendencies? Just search it on Google. What's up, Dan Dow Trading? What's up, Fair Value Guy? Been loving the 130 macro recently. Check out the day. Yeah, let's go look at that. 130 macro. 130 is right here. Draw the opening price out. Just make it purple. Comes up. It's lower, right? And it's also an order block right there. So you can see price hits that once, twice, lower. If we go on, I'm assuming you mean 1 minute. So let's go on the 1 minute, even though I don't trade the 1 minute. 130. Chops around. Actually ends up taking out this high. Buy side right here. Hits it. Nice. Also takes out this one too, but it's basically all relative equal highs over here. Hits it. So there's your liquidity grab. That's your lunchtime-ish, retracement. And then we end up going down and continuing the trend. And if you want to do, just curious, what does this look like? Let's do this. Yeah, it's just fun to play around with. The 1 minute's kind of hard to pull those sometimes. But yeah, cool. And you also have this fair value gap right here. But like, look how, I don't know, like I said, the 1 minute is just like, it hits it 1, 2, 3. Also, we're respecting this 5 minute order block and then goes lower. So you'd be taking out these lows all the way down. And then I guess it stops, right here on this order block. So there you go. But yeah, nice. I don't really trade the afternoon session, so I don't really use, this is also like another power 3 concept, right? But I don't really use the 130 or anything like that because I'm usually done trading by 1 because I've usually caught something like this, or if it's choppy, I'll just take it off or get out early. Do you know what happened with Red Pill? Yeah, he deleted his account. Red Pill Trading. He said he was going to do a Twitter space, his final Twitter space, and then he's going to be off social media forever. I don't know about forever, but he said he was getting off. But yeah, I don't think he ever ended up doing the space. He just deleted his account. So, what do I think about ES continuous levels versus current levels? ESM 2023. Take the August highs as an example. So you're talking about having ESM versus ES1. Clear everything off. So like the daily chart. Take the August highs as an example. Think better to use SPX index instead of for higher time frame. What you can do is hit this, adjust for contract changes. You can see it basically is the exact same, right? This little button down here. See how the right side, the continuous contract changes, and you basically have these highs are a little bit higher than like this. See, it's more high right here. If you hit boom right there, now they're basically the same. So that's what I use. Yeah, 1 point equals one handle, or $1 higher, one handle. Best tip to new traders like myself who are studying ICT or smart money concepts. Yeah, don't rush it. And also don't rush into live funds like I did. And I felt like I was entitled to be able to trade live funds because I've been trading live funds for years using other techniques. So I was like, once I kind of got the basics down, or I thought I had them down, I got humbled after going on a hot streak. So I would say don't rush it. Don't compare yourself to anybody else, because you can go on social media. There'll always be someone on there doing better than you, or, you know, pretending to do better than you, right? Because you could easily fake, you know, whatever you want on social media. So that's another thing. Don't compare yourself. Don't rush it. And, you know, just submit to time. You see everyone say submit to time. It really does take time to learn all this. Like, I'm still learning stuff every day, and I've been doing this for over a year now, just ICT stuff. So what's up, Jimmy? One question: how to use SMT and which SMT do you decide to use? Well, here's a good example. This is in Q down here. We have these highs, and we have the same highs that have not been taken on in Q. And if you want, we can go side by side, and we'll plot in Q on the 5 minute. Let's go over here. So we have highs. Let's just make it big, bold, and we have highs right here, right? So these have been taken, these haven't. So SMT, smart money technique, means smart money is actively trading, okay? Well, if they're actively trading, what are they doing? Well, they're accumulating a position, okay? Well, if they're accumulating a position, that means when you see this cracking correlation, that reversals are now high probability, okay? And it's reasonable to stalk reversal setups. So when I saw this morning, I also forgot to mention this. When I saw this morning, when I was looking at this, right? This is a 15-minute chart. But obviously I have to my right my SMT chart. This is a 5-minute chart. So when I come over and I'm looking at these highs and I'm looking at NQ to see, you know, what it looks like at these highs, we hadn't taken this high out yet. So it's an indication that, hey, market's tipping its hand to you. Stalking reversal setups are now higher probability than if everything was still correlated and this had not occurred, okay? So that's how you use SMT. And if you really wanted to, you would short the weaker one, okay? You would short the weaker one, the one that did not make the higher high. But I really just only trade ES. So I was trading it, and people said the move today on ES was cleaner. I guess we can compare. This is that fair swing concept I was talking about. And this is something I want to teach more on eventually. But the fact that we took out this high over here on ES, but didn't right here on NQ, that's a fair swing. So if you wanted to trade the weaker one, what can you do? Well, if you're good at identifying when not a fair swing, but when these breakers are going to form, right? You can just sell short above this high. Or if you wanted to, you could maybe do a standard deviation projection like this and just carry it up, right? And then look at that. Sell short one standard deviation on this fractal right here, retracement, sell short at the top. Boom, you would have caught the top of the day by, maybe a tick of drawdown, okay? That's another little tip for you guys, bringing out the goodies today. sell short, a standard deviation above this swing right here, boom, you're catching the top. And and obviously, you know, it's going to feel really scary because it can keep you going, but you have to have a higher time frame bias. You know, you would have the consequent encroachment of the wick, you know, marked out wherever it was. I can't remember. I think it was like down here. But you know you're hitting these higher time frame levels, and they're higher time frame levels, so they're not going to react right away, right? Price is going to dig into that. You know, no mohawks, as ICT likes to say, right? So that's how the algorithm hides in plain sight. So when you have this failure swing over here, you can either A, sell short on a turtle soup, right? And when SMT occurs, that's how you know you're on side. For the most part, there's going to be exceptions. But like, in my opinion, turtle soups are like the highest echelon of like the ICT concepts, because you're basically buying just and selling just like smart money instead of waiting for a market structure shift with confirmation and all that. You can, but you know, they're going to be really scary, and I wouldn't suggest new people to try and learn that. So, but back to the SMT topic, when you see this failure swing occur, you can now trade the weaker pair. So what you want to do is, when price creates this swing low right here, comes up, doesn't take out this high, but another pair does, like ES over here, and then we break lower below this low. Once we break below this low right here, that would be your market structure shift, and you would now look to sell. You could even use like literally the low of that swing low right there. You could literally do, let's make it red. You could literally just sell once we break below, and you see us come back up, just sell right there on that swing low. And you see how price hits it, and then sells off. Or if you wanted, you could just use the order block, right? Right there. Order block hits it. So either way, and even this is an inversion right here as well. Fair value gap, right? There's an inverted fair value gap right there. Support, turn, resistance, right? That's true support, turn, resistance. Boom. So there's a lot of stack confluences there. You have a failure swing, you have an order block, you have a fair value gap inversion. Same thing over here. You have breaker, right? High, low, higher, high, low. And the price comes up eventually over here, hits it. So you just stack your confluences, get probability on your side, right? And you have your SMT right there. So that's how you would trade the weaker pair. I already went over how you'd trade the ES over here. So much buy side from potential buy model. Take that out. One thing is SMT. Yeah, we were going over that on the daily. You have SMT here. What the hell? In here, right? Quarterly shift time. But who knows? Kind of weird today. NASDAQ was stronger. NASDAQ's just been stronger overall. Well, and also its moves are more exaggerated. Yeah, I did make a new low of the day. Thanks, Tim. What is the awesome breakdown? Thanks so much for sharing. What is the breaker tool in TradingView you referred to earlier? The breaker tool, I'm not sure. If you mean how I break up the days like this, that's just vertical line, or Alt V on the keyboard for shortcut. But if you're talking about just like a breaker, as in, I just use boxes for everything pretty much, or a line. I don't know about a breaker tool. If you want to rephrase it, I can answer you. Any tips for new week opening gaps and how to use them properly? Yeah, I would personally not want all these gaps on my chart while I'm trading. That's just me. So what I do is I have a separate chart, and as we get closer to a gap, I'll just highlight, Control C, come over and paste it on my chart, right? When I need it. That way I don't have 20 gaps on my chart, or 5 gaps. I think is what ICT says to have, just 5. So I have 1, 2, 3, 4, 5. The best way to use them, black holes. As price starts to get, you know, if we open up in the week and price just starts consolidating and doesn't really leave the opening gap, you can kind of expect we're going to consolidate a lot. But when price opens up like this, or let's say, like here's a good example of the week. new week opening gap. The price doesn't really leave the gap, right? It's just kind of consolidating around it. So that whole week was pretty choppy. But right, like, let's see. It's a good example. This whole like the whole like couple of past weeks have been pretty bad. But like an example here, price leaves it, hits this one, and then uses it as support to come back to the other opening, that week's gap. And then once we start finally trading away from it, price can start actually, getting some nice moves. So, but while we're around it, it's pretty lackluster. Like right here, it's just really choppy. But as we get farther and farther away, it gets a little bit easier. That's kind of how, I don't really use new week opening gaps too much. They're just POIs, or points of interest, that I use, right? So when I say points of interest, what am I talking about? Talking about this. When you have a point of interest, let's just say this is like an opening gap, or it could be an order block or whatever. Let's go ahead and name it POI. Make it big and bold. And price, let's say for like a breaker or something, price comes up, right? Gives like the double top illusion. Let's say that it could be equal highs, right? It could be buy side above like relative equal highs over here. It could be an order block, whatever. It looks like it's going to reject and then goes higher through it. And then you have the breaker form, right? This would be your POI. And so you would have your breaker. And this would be your market structure shift, obviously. So that's like a breaker. And you would want to, sometimes if you can get it, best case scenario, right? It comes up in like the 50 at least, or maybe optimal trade entry. But a lot of the times you have a breaker, it might not even come, to the 50%. Or just about there. So that's like an ideal scenario, obviously. But like a POI would be something I'll be looking at like this. Like on, where are we? Like right here. As we come down, or maybe over here where we bounced. As we hit this, right? I'm now looking for this scenario to play out right here. So this could be the new week opening gap, or liquidity above here. So this is like a higher time frame point of interest, like a new week opening gap, and you would want to see, your setup form, or an institutional swing point form. It's all about this graphic right here. Let me pull it up real quick. You guys can screenshot this if you want. It's all about this right here. I don't even know I'm not sure who made this, but this might be their logo on the bottom. So whoever made this, thank you. I'm giving you credit even though I don't know your name. You have market structure, a point of interest. You want to see like a raid or something inside that point of interest. Okay. Could be order block for value gap, or just, a pair of the two. And then you narrow in on a lower time frame, which is for me the 5 minute. And that's your confirmation, right? And that's how you frame your trade, and that's how you manage your trade on that time frame. Make sense? Let's see. Okay, we're about, what time is it? 9:52? Okay. If no one else has any more questions, we can end it here. And I already showed the box indicator for those wanting it. If not, you can just go back and rewatch the settings if you missed it. It's just called Futures Exchange Sessions 3.0 by Infinity Trading. Shout out him. And the settings right here, one more time, you can look at it. But that's really all I use. I don't really use DR, RDR too much. I might pop it on just to see. But the DR, IDR is literally just an ICT concept. Using the opening range from 9:30 to 10:30. So, and it's backed by data, which is nice. Oh, but we've gone for like 2 hours now, so I am going to hop off and get ready to go to bed, and I will see you guys tomorrow on Twitter. Hopefully I'm not locked out again, because they don't like me talking about SMT. I want to make the market makers off themselves, please don't ban me on YouTube. Thank you. And I will see you guys tomorrow. I'll try and do these live streams once a week, and maybe when I get time, I can make some actual like short form content that's edited and cut up nicely on certain concepts. But I will catch you guys later, and y'all have a good night. Peace.